The stock market decoupled from the real economy a long time ago. The stock market now has nothing to do with the actual economy. You would think over 70 million unemployed would reflect some distress to the stock market, but no. The stock market is an accurate survey of the average billionaire's state of arousal. It's a metric of their flaccidity and rigidity and little more. Wall Street is like over 80% automated now, running on algorithms. Watch a stock like Kohl's, up 8 points one day, down 7 points the next, and then the following day, up 9 again, and so on. Or maybe the trillions of dollars the Federal Reserve is pumping into the market, including now directly buying individual corporate bonds, has something to do with it. My sense is the investors have internalized that if things go bad the Fed will spend whatever it takes to support the market, just as they have done to date. $1 trillion a month from the Fed in emergency financing probably helps. Even though it doesn't go directly into the stock market, it certainly helps create a beneficial climate for it. Republicans like to talk about the moral hazard of expanded unemployment benefits of $600 per week, while ignoring the literally trillions of dollars the federal government is pumping in the market to protect their wealth. Most stock investors have more or less made back their losses, with the Nasdaq setting new records, while millions of working people have lost their jobs and are lining up at food banks. And let's not forget how first thing our Congress did was to pass a $100 billion tax cut that went 85% to the top 1% of wage earners, and 95% to the top 10%. It's amazing what the government can do to protect their masters. The stock market is holding up because the private sector really cannot fail. Modern capitalism is all about corporate bailouts and make the people pay to clean up the mess. After the Great Recession, economies were bailed out and the people paid with lower benefits, cuts to services, and more flexible labor markets. This cycle really has to stop. It is truly taking the hit. A fundamental rethink of capitalism with a bigger emphasis on the role of the government is long overdue. If the government has to keep bailing out the private sector, building astonishing debts, why not go the whole hog and nationalize industry? You might as well. The private middlemen are doing nothing useful, except taking the profits for themselves. The Fed has made it clear they are not going to let the market decline. They are buying the bad debt and equities and pumping in money. This is not a mystery. It's a no-lose bet. It's a zombie cat bounce. All this tells me is that people with lots of money still have lots of money. Stock prices are like house prices. The value of all stocks and all houses is supposedly based on the recent selling price of the small percentage of stocks and houses that have recently changed hands. Stock housing market valuation is up down by X trillion dollars. Actually means that if everyone bought every share house at the current price, then the calculated sum would be X trillion dollars. However, it is the volume of buying, selling itself that massively impacts the amount paid for individual sales. On the other hand, the general economy only measures what is actually being bought and sold. No matter how bad things become, stock prices just keep going up and up and up. In 2020, we experienced the worst public health crisis in 100 years. The U.S. economy was plunged into the worst economic downturn since the Great Depression of the 1930s. Americans filed more than 70 million claims for unemployment benefits, and civil unrest raged in major cities all across the United States. Meanwhile, we witnessed the greatest stock market rally in American history. No matter what happened, nothing could seem to dampen the wild euphoria on Wall Street. To start 2021, many believed that we had finally reached a point when bad news would finally start driving stock prices down. Yesterday, I made a video about how some experts were warning that stock prices could fall substantially if Democrats gained control of the U.S. Senate after the runoff elections in Georgia. Well, in the short term those experts were proven wrong. In fact, the Dow Jones Industrial Average actually rose 437 points on Wednesday. Of course, the bigger news on Wednesday was the utter chaos that we witnessed at the U.S. Capitol in Washington. Doors and windows were smashed, members of Congress had to be evacuated, and protesters freely roamed through the halls and offices. You would think that something like that would definitely send stock prices plunging, but instead the Dow ended the day up 437 points. Even though we have just come through the worst year in recent memory, and even though our system of government is in disarray, stock prices hit an all-time record high on Wednesday. One explanation for this is that investors consider the chaos in Washington to just be temporary. Although the takeover of the capital is shocking, it's widely perceived to be temporary and contained in scope, at least in the immediate term, says Young Yu Ma, Chief Investment Strategist and Managing Director at BMO Wealth Management. This is going to be dealt with pretty swiftly and won't have lasting repercussions in terms of disruptions to the government, Ma added. It won't change the trajectory of a Biden presidency in the coming weeks. We shall see what happens, but a lot of people out there are not so optimistic that the governmental shaking that we have been witnessing will pass so easily. Moving forward, investors appear to be salivating at the prospect that a Biden administration will mean that more stimulus money is on the way. I think there's an expectation that there's going to be a lot more spending, Jason Trennert, chairman of Stratagas, said on CNBC's Squawk Box on Wednesday. If the Democrats were to pick up 2 seats, there's no question in my mind that later this year there would be a sense that more spending is needed. Goldman Sachs expects another big stimulus package to the tune of $600 billion in the near term if Democrats prevail and take the Senate. Why not make it $600 trillion? Every dollar that we borrow and spend just makes our long-term problems even worse, and so why not get the process over with? As I discussed the other day, the trillions of dollars that have already been pumped into our system over the past 12 months by the Federal Reserve and by our politicians in Washington have fundamentally changed the trajectory of our future. The money supply is rising at an exponential rate, and we are now on a hyperinflationary path. Sadly, under a Biden administration there will be no going back. Instead, the accelerator will be pushed even further toward the floor. But it isn't just our financial system that is in grave danger. Our system of government is also in grave danger as well. Our culture is in grave danger too. In fact, our entire society is in grave danger. There is no future for our country if we stay on the path that we are currently on. We are engaging in self-destructive behavior in thousands of different ways, and even though there have been endless warnings, we are so addicted to our self-destructive behavior that we just can't help ourselves. At this point, it is difficult to imagine how anyone can possibly be optimistic about the future of our nation. But apparently stock market investors disagree, because they just keep pushing stock prices higher and higher. There are a number of factors which keep stock markets inflated. Exceptionally low interest rates lowers the discount rate, raising the price of an asset, Federal Reserve liquidity, lack of alternatives, etc. Nonetheless, this isn't a normal forward-looking scenario. Forward-looking would surely predict lower profit and cash flows. But Federal Reserve purchases of corporate bonds is another thing entirely. The incentive at many companies may be to sell more bonds. Why not? The Fed has guaranteed a buyer at lower interest rates and then use the proceeds to buy my firm's stock. If I have stock options, I make money. It's a great country if you are wealthy. The Fed has cut interest rates to zero to juice the stock market, causing interest rates on CDs and savings to crash where 90% of Americans stash their cash. What's good for Wall Street, not so good for Main Street. It shall be very interesting to watch how high they can go before the system finally implodes. This was the Nomad Economist. Please like, share, leave me a comment, subscribe. And please take some time to subscribe to my backup channels. I do upload videos there too. You'll find the links in the description box. You will also find a PayPal link if you want to make a donation. Thank you wholeheartedly to all those of you who have already donated. Stay safe and healthy, friends.